G'day folks, welcome back to another update on natural gas and its ETFs. Now we've had some bearish movement on natural gas in the last few days since late November, but overnight it's actually broken above our key indicators, giving us a fresh bullish movement, which means all three timelines are now bullish on the monthly, weekly and daily charts. Before we go into the charts, first we look at some outlook fundamentals. Natural gas prices rebounded slightly after hitting lows in early 2024 due to mild weather and high storage levels. The Henry Hub spot price averages around $3 in late 2024, driven by colder weather and rising demand. The market drivers increased Asian demand, especially in industrial sectors, and geopolitical risks in key supply routes, example the Red Sea and Ukraine, adding volatility. LNG production lags behind demand, particularly in emerging markets like India and China. For the ETFs, reflect leverage bets on natural gas price movements, volatility and seasonality significantly influence BOIL and KOLD performance. UNG offers exposure to natural gas price changes but remains sensitive to global microeconomic factors. For long-term risks, uncertainty around supply security, geopolitical tensions and renewable energy adoption could impact demand and pricing dynamics. Related to AI data centers, they require significant energy, but most are powered by electricity from mixed sources, including natural gas. Estimates suggest natural gas contributes indirectly through power generation, as it accounts for roughly 38% of US electricity supply. The exact demand from AI operations varies, but is growing with the rise in AI adoption globally. So first, looking at the natural gas price, again, we always look at the trends on the monthly, weekly and daily. So on the monthly, first off, it's been in a bullish move on the CCI 150 above its moving averages. And you can see there, it's also a fresh break above the moving averages on the price as well. And by the way, if you're new to the channel, these moving averages are available in the description below in a video if you want to follow up on that after this video to learn how to draw those on your charts. So on the monthly, it's bullish. On the weekly, likewise, it's been bullish above the moving average of the CCI and also the price. And there's no sign of a divergence or a bearish or bullish divergence on both the monthly and weekly at the moment. On the daily, and I'll expand this one, we did have this key support down here at 1917 and a key resistance up here at 3634, and it's broken down now to this previous resistance and now support at 3096, bouncing out of that. Again, there's no divergence to talk of, although the CCI is broken above its moving averages, giving us a fresh bullish signal, as I said, after being bearish for a number of days back here. And it's also bullish above its moving averages, a very thin range of moving averages, but bullish as well. So bullish movement on the daily means you can trade on long positions on the intraday time frame. So if we go to the intraday, I've got here the daily as a reference. Again, bullish moves only, taking long trades only. So that would have been a nice little trade to take during that when it broke above the moving averages of the CCI and also the price. And if we drew a gain, so if you would have gone long in one of those candles there, and I prefer to exit when the CCI breaks into that moving average range. You can see there it's near the top there, and that would have given you a 146 point gain. And again, avoid going long, even though the price kept going up, avoid going long. That would have been a false break there, and you would have got stopped out there had you put a stop loss in there. And again, another break above there. So at the moment, I'm going to consider this. Let me just get rid of that. At the moment, in terms of divergence, first of all, let me go back to these ones. We had the double bottom here on the CCI versus lower lows on the price. That bounced and hit our minimum target range there. Back here, always mark these with the bearish and bullish divergence. I've marked them with little rectangles. The more recent one, we had a bullish higher lows here on the CCI versus lower lows on the price. That also bounced, and if I was to draw a target range I'll take it from that low to that significant high, you can see there from that range, it bounced and it gapped right up to the 60% level. So that would have been hit our minimum range almost immediately. Then it gapped up to the 61%. The problem with these divergences is you can't tell exactly where it's going to stop. So at the moment, we've got another divergence here. That's a double top on the CCI. I'd call that a double top on the CCI versus from the same point versus higher highs on the price. And if I was to draw a Fibonacci retracement, you can see there it's already reached our minimum target range. And I stress minimum because there's no way of knowing exactly where it's going to stop. It's already hit that range, so it could bounce out of that. But notice the CCI still made a fresh break to the downside there. So if you were going long during this period and you're holding on to that position, I use these bearish divergence in this case to take heed and get out of the trade, especially if you see a bearish divergence. So the CCI is starting to drop, and likewise so is the price. So at the moment I don't see any sign yet. Again, I can't tell you where it's going to stop. This could actually fall into this range a lot deeper than bounce, or it could actually fall a lot further. So for BOIL, on the monthly, this is very bearish on the price chart. As you can see, there's no CCI for it. On the weekly, again, if you're new to the channel, I always repeat this, but we've got lower lows on the price chart with the price continuing to decline. But notice we've got a bullish movement on the CCI, giving us a bullish divergence. Again, there's no sign yet of it breaking higher, significantly higher, to put any long trades on it at the moment. On the daily, again, we're bouncing this range between this key resistance at 61.05 and this support at 35.98. It's almost hit a double bottom here off that support and bouncing. You'll notice we've got a fresh breakout to the upside on the daily. So again, if you're trading this on the intraday, only taking long trades only. So looking back on the 1 hour chart, again, you would have gone long with a fresh breakout on that one, and you would have closed it out near the top. So a very minor gain on that little trade there. Go long again when it breaks above on that one, and you're probably still being the trade at the moment. So carefully watching it. Again, if you're trading this on the hourly, to close it out as soon as that touches that moving average range. But again, going long only, and follow the intraday time frame in direction of the higher time frame, in this case the daily. So for KOLD, this is bullish movement on the price chart, at least on the monthly. There's no CCI completed yet on the monthly CCI. On the weekly, back here we had a bullish movement or divergence on the CCI versus lower lows on the price, and eventually it bounced. And you see what I mean by significant bounce out of that divergence, and that's where you would have started going long once it started breaking at significantly higher than the moving average range of the price chart, so long as the CCI kept rising. And on the daily, again, I've got this key support down here and this resistance, but it's also been fluctuating around this minor support resistance range here, and currently now broken into a bearish movement on the CCI and also a bearish movement on the price chart as well. So bearish movement on the daily. And going to the intraday chart, the 1 hour chart, you would have taken short trades from that point there, from that candle, and you would have closed it out on that little range there. And again, similar to the other chart, another entry there, and you would have made a small gain, or if not maybe a break even if you closed it out, depending on which candle you got into there. But predominantly short trades at the moment based on the daily trend. Lastly, you're looking at UNG. Now, this one's got a CCI on the monthly, giving us a fresh breakout to the upside on the CCI, bullish movement. Although notice the price is still very bearish at the moment, below its respective moving averages. I prefer to trade going in the direction of this CCI when the price also breaks above its respective moving averages, like it did back here, for example. You would have gone long on that candle there, just confirming that break of trend on the price as well as the CCI. So a bit too early at the moment to call that a bullish movement on the price. Wait for it to break through that moving average range, and that may happen over the next couple of months possibly. On the weekly, we've got this higher lows on the CCI versus lower lows on the price. Notice the CCI is still rising with the price still dropping. So again, wait for it to break higher. And on the daily, again, it's got stuck in this range between this minor support and minor resistance at 12.96 to 15.20. Currently bouncing off that minor resistance at the moment, but notice we've got this break above the moving averages of the CCI, but also the price. You would have gone long on that candle, and you'd still be in a trade if you're trading this on the daily. And if you go to the intraday charts, again, bullish movement on the intraday only. You would have taken a long position back there on that candle, and you would have still been in a trade because that still hasn't broken into that moving average range. So you'd still be in a trade at the moment. And that could well hit that moving average range in the coming hours when the market opens for UNG. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.